we can be selective about what we buy. And you can't buy everything, and you shouldn't buy everything. You got to be concentrated. If you don't feel stupid, once in a while trading, I don't know, you're not trading then. I mean, this is going to happen. Everything can set up and they just dump it out. Some random funds change their mind entirely, right? Things change over time. You can't predict that. Think about how you actually trade and make that your real universe. Maybe you're not honest with yourself and that's all you do trade. You trade spec bios. Okay, fine. Make it all biotech. If that's all you trade, then that's your histogram. Small names moving fast. That's the time to compound your account the best in my view. And you got to do it incrementally and carefully with gains. And it can be choppy on the way out. So you kind of have to be aggressive about getting in and out, making sure you're in on the move, right? I'm just waiting for any kind of a turn, trying to get back in.
Okay, welcome back, everybody. It's my honor to introduce our next presenter at the TraderLion conference, Leif Soreide. Really looking forward to this. As you guys know, he's the U.S. investing champion of 2019, a difficult year for growth stock trading, and he's done many podcasts with us previously. An amazing educator, trader as well. A lot of the kind of price and volume nuances that I look for in charts, I learned in those initial interviews. So Leif, thank you so much for being a part of this, and really looking forward to diving into this topic. Basically how to fish in the right spot, I think is kind of what you're conveying today. So welcome, and thanks for being here.
Thanks for having me. It's an honor as always. I'm trying to bring something new to the table this year. We're trying to focus on, creating your universe, and kind of, I wouldn't say put the math to it, but sort of put the amount of stocks that are in your universe into a histogram. I've seen, people start to use this, and not even doing it exactly the way I do it, but, making it a similar histogram, saying, okay, this is setting up for me, and I'll show you how I trade it, what kind of clues it gives me. It helps me kind of press it when the swing trading is hot, and turn it off when it's cool. So it's a great indicator to use.
Perfect. Well, let's dive in. Or did you want to start with this quote here from Stephen Hawking?
I don't know. It's okay. We'll skip it. Let's go into, I guess I have a slide just introducing sort of the background for me. Obviously, this is my family. I'm father of 4, and obviously I always tell everybody max out on the kids, whatever number that is for you. For us, it happens to be 4, and we're very busy. Time is precious. And Richard's got 100 jobs and no kids, so now's the time to sort of get yourself to get there before you have all these. And that was been my path, and I settled down and do trading like exclusively for the most part now. Won the U.S. investing championship, and it's helped me kind of reach out to other traders and even talk to some of these influences I have personally. Obviously William O'Neill's it's all sort of based around that. So he's like the main guy. He passed away recently. And then we still have Mike Webster and David Ryan. They're on IBD Live quite a bit. And I've had the honor of, kind of talking to them a little bit there. Stan Weinstein for stage analysis, some intervening for early entries, and like his trend template idea is an influence for what I'm about to talk about too. And Zanger for volume and chart patterns. So just a little bit of fun before everybody falls asleep. I know everybody's looking at a lot of these videos here, but we have this thing called a significant other indicator, and sometimes you got to fade yourself, right? So if you start running around telling everybody, you tell your spouse, say, oh, I did it, honey, it's going to be a great year. Like that's the time to sort of mind your risk, work on your signal, and at least maybe sell a little bit or adjust your stops, something like that. So
is there a reverse significant other indicators, like when we've been basing for a long time, correcting? Is there
well, there's the reverse one, right, too. So you tell your wife, like, oh, I don't know, it's I'm never going to make it, and you want to quit, which is everybody gets there at some point, but you got to have that no quit attitude too. We're going to talk about that, because we have we'll talk about Leo, who he did a talk with you, and one of the last things he said is never quit. And he had a tough journey. I'm going to get there. I'm getting ahead of myself. But you got to know when to sell, and you do have to sell at some point, or at least take partials. And you're your own indicator. Are you giddy? Are you too excited? And in the other way, if you think you're never going to do it, that's the time to start looking at what's setting up, maybe, right? And maybe you're missing something. So anyway, just a little fun little slide there. But the first things first, I mean, I always say trading is sort of a lonely venture for a lot of people, and that's why a lot of people quit and all that. So I'm all about the educational platforms. I've subscribed to several. Now I work on my own, obviously, exclusively, but it's great for idea generation, and really everyone learns somewhere. And even the people that knock the services, they'll let it slip where they learn and what service they learn from. So you got to take that, consider that. At Champion Team Trading, we really do word of mouth. I don't advertise anywhere. So we just kind of want a great trading environment with like-minded traders. So you kind of get what I'm doing already, and you show up, and then you're going to be in good shape. And we're not listening to crazy stuff. We're very focused, and that's you want to be around a focused group, even if it's not with us. You want to trade your style and don't have 100 different styles going at once, because you kind of get random results with, random, methods and stuff. So, but anyway, part of that is, Leosh, we're honored to have him on the Champion Team. You did a great talk with him, Richard. And, one of the things he said, like I was saying, is, you never quit. He had a bumpy journey, but, he's up 300% plus, and, leading the contest, or at least close to it. He's top one or two. So, it can be done. He's an example of that. He's done, master trader, and then he trades with me at CTT, like a lot of people. It's key to be around, like-minded traders, and have this kind of motivation. Like, you can do it, but it's not a typical result, right? So I don't want to say, I'm not the guy that's kind of promoting, huge returns, and you're gonna have cars and all of the lifestyle stuff, because I think it is a grind. And if you show up with that attitude, and we're on red signal, it's all about risk management or something, you might not understand it. Like, it takes some time to get there too. So you don't want to be in the market all the time anyway. So you kind of have to dial things back when things aren't working, and press when it is. And you got to be concentrated. Leosh does that at 2 to 8 stocks, 25% positions on margin. You got to do margin if you want to win a contest. And you got to watch your drawdown. So that's him. But anyway, so he trades our universe. So just to tie it together, we're talking about the universe that we trade here. We want stocks in uptrends, the stage 2 criteria. Obviously, that's, Stan Weinstein's idea. And, like the trend templates from Minervini, you want to stick with something like that. But, we add a bunch of qualifiers with, liquidity, average daily range, things like that. Then you get, what's in your system. And sometimes, we do kind of not really break the rules, but we do add IPOs, because they don't have the time. They don't have 200 days of trading, and they can be rewarding. So you want to be flexible to add those to your system, but you want to take a look at what's setting up overall, and that's going to end up in the histogram. And you want to see, are there more stocks or less setting up for your style? And there can be false signals too, or choppy periods, but we're going to go over that. But you got to define your universe and say no to some stocks. Just say no, right? So you don't have to trade everything with a nice chart pattern. And I always say, kind of think beyond the pattern. That's sort of our catchphrase, I guess. And I'm sure someone's used it, but we're gonna borrow it. It's pretty much all this stuff has been done. It's just everyone's way of looking at it is different, and you're gonna see everyone has their little things they favor and such. So anyway, so when you're looking at the stocks in your universe, you want to make sure you're selective, right? You don't want to just trade any stock just because it has a pattern. Especially if you don't understand it, like some highly speculative biotech stock with no earnings. That's kind of a random stock, and if you don't get it, you probably want to trade it small, if at all. If it's just no earnings, then it's hard to understand what it is, and you don't get it. Prefer something that you think is a leader. Look for increasing fund ownership and volume, of course. Stick to quality. And like I said, trade random stocks, expect random results, right? I mean, if it's not a leader, the leader is almost the key, right? You want to trade a leader. What is a leader? That's a whole different presentation, but you have to work on that. So we can be selective about what we buy, and you can't buy everything, and you shouldn't buy everything. You got to be concentrated. So sort of the ideal universe, when you look at all the stocks setting up, for your criteria. This is a look back at, in June, and things looked pretty good then. Technology was leading, energy was, I think the next day barely on here. That's sort of the spread I want to see. I want to see tech growth leading. So it's just a quick breakdown of that, a recent thing. So we want to see energy falling off, and that has to do with inflation and recent trading and such. If the money kind of rotates to energy when it comes out of growth, so you see energy going up and tech going down. That's kind of a problem. And these are all, keys to looking into what's setting up for your style. And this is that breakdown here. You see tech, the sectors in the top left is tech is leading, energy's at the bottom. So that's kind of ideal until it's not, right? That could be exactly when it starts to change. And then you can also look at the market cap breakdown, whether you're trading large caps or, small caps weren't really breaking out yet. I mean, small caps recently took off. And, look at the country breakdowns and the industry breakdowns, so biotech, software leading, semis leading. It's kind of a good mix there while things were kind of hot there for a minute. And then fast forward to July 22nd, you have technology sliding, right? So now it's number 3. So that tends to, no matter what the index is doing, your stocks in trend, the growth stocks are kind of falling apart there. And we're sort of adding regional banks. Like regional banks aren't exactly what I swing trade. I really don't want to swing trade them at all, even though they recently had a good move, but they've been asleep for the longest time. And, they made nice bases, some of them. But if you missed it almost day one when they all kind of broke out, then you're buying the laggards and you're getting limited gains, and you're risking 5% to make 5% maybe. So it's just kind of not the groups I want to trade suddenly when the growth stuff falls down, financials pop up. But then you just have to adjust. You can do some trading in those, the ones that are setting up. We're in APO recently and things like that. So, but take a look at the breakdown. This is going back to June. Stocks that are setting up for us that meet our criteria, kind of the performance versus the S&P 500, they really outperform it. So these are the real movers that we look at. So you can see that difference there, and that's what you want to be trading, the ones that are the strongest in the market, and that's where you end up when you have stocks in trend, that are, you got the 50 over the 150 over the 200. You're going to see those right sides of the basis tighten up and not have random choppy charts. And one of the things, I don't have a slide about it, but I've been saying stage 2 transitions are choppier than the textbooks, right? I mean, you don't, if the 200-day is flat, you're always trying to time the turns where it starts to move, but it's got to start moving. We want to see stocks that are typically trending first, so the moving averages are rising. So that's how you get the good right side development. Look for those decent pivots in tight areas, cup and handles and such. So anyway, so when we plot this histogram, we kind of look at it a few ways. The 21 EMA we find captures kind of the move, but you can have a false signal, a false move, or a difficult move. If it's all regional banks, it's a tough thing then. But you want to see, you don't want to see huge liquidations when you see all the stocks in trend really fall out of bed very quickly. Like we had something like that in April. So that was sort of something we had to sidestep very quickly. But then it consolidated and then kind of started pressing out again. So we're able to get involved. So kind of waiting for confirmation, you can be kind of late. You got to look at the stocks also. You can't just look at this and say, I'm just going to go all in. And you kind of have to get in incrementally, obviously, buying the stocks as they're breaking out, looking at the groups that are setting up and such. And the mix that's moving up in the stocks and trend. Like if you're trying to buy tech stocks and they're moving down, you're probably having a hard time, even if the more and more stocks are entering the trend, because they're regional banks or whatever. So anyway, so you want to look at some ETFs for verification. So recently we had a very nice looking trend, but it was mostly because regional banks were being added in the small caps. And it wasn't a lot of the small cap growth that was working. So it was one of the more interesting spots in the last few weeks where we see the FFTY sort of making almost the spirit of, I borrowed this from Mike Webster. I told him this last time we talked, sort of a head and shoulders look to it. And then I think it got even worse from here. This is from a week or two ago. So if that's going down, where the trend count is going higher, these are hand-picked 50 stocks from IBD. You're going to find the growth leaders in there. And if those are falling apart and your histogram is rising, but you're trading these type of stocks, you kind of have a false signal. So you got to be careful for that. It's kind of an interesting thing that we sort of planned this, and this is actually what happened. So now we have something sort of to show a recent sort of false signal where kind of mega caps are kind of all rolled over, and the regional banks and stuff that we don't really like popped into the trend there. So anyway, so some more false signal talk. This is regional banks popping, and the FFTY, those IBD 50 stocks are not doing anything. So unless you're going to move to the regional banks very quickly, you're not really going to get much out of this this divergence here. This is kind of a false signal for the types of stocks we trade. And you'll see it was even home builders were part of this, running right up the right sides with kind of no valid buy points. So all those, the count for those rose, the count for regional banks rose. And some of those were buyable. I'm just going to say I wasn't really too interested in them, and they just all kind of broke out one day. So I missed some of those. And you don't want to be in the market the entire time anyway. You're going to catch those choppy periods. But we do want to let some stuff trend. You want to sell some into strength and let them trend. And if things can hold all the moving averages and such. So, but basically since the, post-pandemic highs, it's been a relatively thin market, but there's been plenty of good opportunities, and that's what we've capitalized on. And you can see Leosh up 300%, just trading all the stuff we look at, everything in the that's on the histogram there. So here's a little math to it. And this is the point of our platform. We have someone that is, I say he's a genius, basically organizes all our stuff, can do all this, all these things. Most of the time you're going to have like 123 stocks. And when you're down to 5, that means you're pretty much out of the market. And if you're on your way to 1,000, like the COVID highs, you want to be involved with that, but, watch the, look for the exit, because you're way overbought. Right now we have over 400 or so. So I think it's like 11% of the time is something like that where we're at now. So it's a little elevated, but that's a lot of regional banks, and they're moving fast too. So that's kind of puts them in the trend there. So, yeah. So, I mean, this is just kind of the stats behind it. So, and, more of the universe kind of looking back, you see it kind of choppy. And when you kind of get to the highs, you can look to, sell some into strength, and then you kind of miss these drops too. So it kind of helps that way, and you're following the 21 EMA. So
sorry, just jumping in. Before, you probably will address this, but just in general, here you're kind of looking to get aggressive when it makes that turn above the 21 EMA, and we start to see it trending above it. Yeah.
Usually you're going to need a consolidation first. Mm-hmm. So you can see here in April on the right side, it really fell out of bed there, and then it consolidated a little bit for 7 bars or so, and then stock starts setting up and moving. That's when you're getting aggressive. Going back to last year, things were falling apart all the way until the end of the year, into November. And then stuff started coming up off the lows, but that's not setting up proper right sides of the bases. You need a little bit of time. So even if it just kind of goes straight up, you do need a little consolidation, let things set up. And some of the stocks are going to set up during that pullback. And that's going to be something like Nvidia. It went on to, as this was declining here, we're going to show that it's sort of like a relative strength indicator versus the market. Right. You see the trend falling apart, stocks, selling off or way down to, I don't know, what are the 20 stocks that are even in the trend there. And then they start pumping up again. And then you have something like Nvidia here during that period, showed relative strength kind of, while all these are falling apart, like I was saying, and then it kind of resumed its, it started basing. That right side looks really good, and then it took off and went for a double from there. And I think we only caught a little piece of it, but we've been trading, AVGO and similar names. So, growth versus value is kind of an important thing to match against the histogram. If growth is not leading value, like we have a recent sort of sell-off. This is last week or something. Growth kind of broke down versus value with more stocks and trends. So this is sort of a false signal. You got to keep your eye on growth. I mean, that's really the key. You know, as long as the relationship is consolidating or rising, growth winning, right? That's you want to be probably swing trading harder to the growth side with more size. As things are rolling over, growth is losing to value, you're probably going to have a difficult time, and you got to downgrade your signal. And that's a little bit of thinking beyond the pattern when you get your patterns, and you know, maybe you see something setting up, but you got to recognize, you know, when things are not working and growth is getting bested by value. You know, beginners kind of focus on chart patterns and think there's, you know, that's the key to everything. But we kind of layer our odds onto, you know, a chart pattern that sets up based on, you know, what is the group doing? Are more of these stocks entering the trend and things like that? And you got to learn what a proper base is and the right side of the base development. You know, the tight areas, you know, you always want to kind of cup and handle, trade like a VCP, similar idea, tightening throughout the base. You know, shakeouts are meaningful. There's all the little things you got to learn, and it takes years to do it. You want weak hands out. I mean, this isn't on the slide. I'm just saying a couple of things here.
Off the dome.
To go, if you're a new trader, there's so many little nuances that you have to find out, you know, that make you money, right? You get a 50-day test with a shakeout, recapture, all that kind of stuff. You gotta find your setups. You know, and tight areas are really just the key to understanding supply and demand. You know, as you know, that's what a base is. You just want the supply to kind of work its way through the right side. When demand starts to increase and there's no supply left, and you get your breakout. That's what we're looking for. So, you know, you want the good patterns to lead you to the groups that are setting up, and you're going to find the leaders, right? That's you want the leader, the top one or two stocks in the group, and kind of target those. And you got to be patient. You know, sometimes you're not going to get them. You can play some similar names, but ultimately you want the Nvidias and, you know, the AVGOs and stuff like that. So, you want to recognize when breakouts have the lower odds of success. Is it institutional demand, right? Going to your breakout point. We're trading something. I was looking at something today, and we got it out 8%. I was seeing a lot of buying inside before the buy point. So to me, that was you know, real buyers stepping up, not people looking for some kind of a daily time frame trigger, which is what I use. But I was seeing that ahead of it, and that was good for sold some up 8% plus, you know, for a single buy. So, you know, sometimes and then sometimes the earnings pauses create the tight areas. So you look at a tight area and you want to buy it, but just waiting for earnings. You know, there's nothing there. It's not even a supply and demand thing. Just sometimes I think it's just a pause. So you got to consider that too. Yeah, ultimately the stocks are going to guide you. If you're making more money, you got to size up. That's really what it's all about. You're going to catch your runs. You don't want to give it back. That's the main thing. So. And then we try to work on our edges. You know, I'm not a big poker player, but I do a couple charity things once in a while. This is a scene from Rounders with his name. It's John Malkovich's character, his name KGB here. You know, it takes years of screen time, you know, seat time really, to line up all these techniques to kind of improve your odds and know them on the fly, right? You know, real time trading is way different than the hindsight stuff that everybody, you know, you see on Twitter and all that. So we're working on and making notes about what's setting up before it does, so we know what to do and have at least what we feel are some better odds. They're not all going to work, you know, so you got to be, okay, where are you wrong and all that stuff. But this scene was a little dramatic. You know, they're not all tells aren't this obvious of a guy flipping an Oreo around, right? Giving away that he's, you know, bluffing or whatever he was doing there. You know, the top level of poker players, it's more of like a small shift in the seat or chair or whatever. It's more of a tell, something real subtle. You know, so this is the theatrical version of that. So you see it, but you know, subtle edges in stocks. If you're not thinking about it, you're only going to see it in hindsight. So you kind of have to know what to look for. You know, you got to recognize sort of the liquidation of weak holders as an edge. You get your swing traders out of the way. I'd prefer if no swing trader was involved in any stock I buy. I want to see real buyers, because They're not selling up 5-10%, they're holding it. So you want to see real heavy buying. You want to see that inside the bases sometimes. You need to look for clues, look for the big volume bars along the way, see the footprints and such. But if swing traders are less involved or they got shaken out, then I'm more interested, right? So, and there's a trade at the end of this. We're going to show that we capitalized on that for quick double digits and just took the profits. But you got to review your past trades, winners and losers, of course, and it'll help you spot what you're doing wrong. Are you chasing stocks? Are you too aggressive? Are you when the market's not working, are you pushing too hard? Yeah, and don't forget to look at similar names. Within a stock that you're buying, you got to have some clues and some tells. Are they moving, right? What are the market conditions and all that? So that's the edges are subtle. All right, so we did AVGO as a trade here. So we had some requests on Twitter X. You can find me there. People wanted a couple successful trades, and I think an appropriate one was AVGO to show here. We got this one a little over 600 on a turn with a 2% risk, and went that kind of rise, and then we sold it and traded again. I even tried to short it and scratched it, and I don't have that up here, but we did it. We did this twice. And I'm trying to get back in this one again. So you're kind of thinking about this in terms of all the AI stocks we're setting up, and this was setting up. So, that's really the edge. I mean, there's something going on there in the theme. Is there a theme? The N and Can Slim, what's new there? Like, I'm trying to do the N and Can Slim, what's new about Leif's trading, right? This is sort of the idea of the histogram I want to show. And I've always kind of used that idea of, how many stocks are in a trend count and stuff like that. But putting some math to it makes sense. And, a couple other edges, you're looking for mini shakeouts, like I was saying. Compare 3 stocks. If AVGO is going to work, Nvidia is probably going to do something, and similar names. You got to fade the group think too. If everyone's saying Nvidia is overvalued, I don't know. But there was somebody that wanted to do a talk with me was saying Nvidia is effed constantly. I was like, well, I don't know what that's all about. Not for me. So we passed on that one. But Nvidia being, everybody thinking it's overvalued is an edge. If it sets up again, you have to fade that group thing basically. So anyway, be quick to target setups that held up well after a sell-off. That's kind of the relative strength idea. You want to sense if it's real buyers or just breakout buyers, and doesn't matter. Sometimes it does. Sometimes the breakout buyers, and there's no more supply left, and the breakout buyers are moving it up, and the institutions come in and chase it. Then you're in luck for that kind of trading. But you do want to see the footprints on the way out. So, and that's all about volume. This is what I'm saying here. So,
on an intraday basis, sorry to jump with the question.
Yeah, go ahead.
What are you looking for? Just big volume bars on an intraday basis to suggest that there's institutional traders involved before it gets to that pivot point? What are you kind of looking for in that chart?
Yeah, I mean, you're following a stock probably for a couple days.
Yep.
There was one that I traded today, and I was starting to see a bunch of excitement buying, and it was just trading inside. So that was a clue, like, who's all of a sudden decided they just have to have this, and they're buying it pretty heavy. And then it broke out on the daily time frame over the prior high, which is what I use. I use the daily time frame, but I'll look intraday. As that broke out, that went 8%. We took a profit scale already because just the signal's a little difficult, but things are setting up. But that led me to buy it. I almost didn't want to buy it, but it just that's the thing. You're sitting there, and everyone's probably thinking what I'm thinking. I don't want to buy this. It's kind of choppy market and all that. And then you see them coming after it. That's sort of what I'm saying. You have to see it though intraday. See the heavy volume start coming in. Just I assume it was institution or something. So maybe, and I was probably right because it did break out. And you can only guess. Sometimes it could be breakout buyers trying to front run a breakout and doesn't do anything. So there's all kinds of landmines you can step on too, where you're wrong and your judgment is totally wrong. So, but that's what the risk management is for. If you keep running into some kind of false breakout, you're obviously going to have to dial it back, so that's that. But yeah, that's a good question, and that's something that you're going to get to. That's more of an art. There's no formula. It's just, if you're watching something intraday as you traded it, and I'm going to show this one later actually, and it may blow out and have to stop even on it too. I mean, but it did stay out, so that's what we're looking for, and that's more art than science, and you have to kind of listen to the volume in a way. You don't actually need a audio, but you gotta feel it. So
Yeah.
that's why we have the big speaker here, so you can feel that. But sometimes the opposite sort of is meaningful, and we've talked about the reverse pocket pivot idea, where you have this kind of minuscule volume, and on a horrible sell-off for growth, one of the things you can do is look for the stocks that were trading on the lowest volume in that universe, right? So you're looking at your universe list and say, sort by relative volume. We're not sorting by total volume. You look at that later, but you want to see what was just, tiny trickle of volume, and because the sellers weren't excited to take it down. That's kind of something important to look at. And then when things set up again, that one, you see there was no seller. So say there is another sell-off, they didn't want to sell it off in the first place. They didn't show up to do that. So you have better odds. They already showed their hand that they're not selling it down, if that makes sense. So you want to maybe revisit, or at least move that stock up on the, on your watch list or focus list, in your ranking anyway. So, but like I was saying, kind of high volume inside the pivot, when it's moving to a buy point, I'm thinking most of the time, I'm thinking that's institutional volume, like I was saying. And I don't want to repeat myself, but I'm trying to get the nuances here.
Yeah.
Yeah, high volume sell-offs in a stock that closes in the upper part of its candle can mean support, like a shakeout. We're going to look at SkyWest. It was a nice shakeout. That's what I keep referring to, at the 50, and then recapture, and then turned up. Big volume right at the buy point. It could be traders, but institutions, like I'm saying, they ran out of supply. They got to get what they're not done buying, so they're going to go with it. So that's the key. You want to ride that, and they don't all buy in one day. So anyway, so a little bit of a technical stuff here. You see a stock that's in our universe, SkyWest, like a smaller airline. And I was saying back here in the first base, like, these guys are small enough to get bought, and then they started trading really well. So we bought it ahead of earnings, and I think sold it into March, and got back into it after this shakeout. So we got a shakeout, and it traded tight on the 50, and then it turned, and that's what I'm using the daily time frame turn over the previous high, off the 50. And this sort of William O'Neill's studies show that the first one or two pullbacks to the 50 simple moving average in a leader are kind of viable. And I talked with Mike Webster on IBD Live recently about this, which is, like I'm saying, how cool is that? Right. So that's sort of why I do all this stuff. I mean, I get to do stuff like that, because I'm a fan of all these guys too, right? I'm trying to emulate what they do, and put my own little spin on it. I'm not reinventing the wheel here, but we're trying to put it all together in a system that works. And sort of journaling, like the whole platform we use is just a big journal, right? So we're journaling, at least the chart patterns and such. So yeah, he agreed that these first touches. So we're working on that, more of that this year. Pullbacks to the 50 and turns. We're doing a lot of that in leaders, and this stays in your universe. This stock just on the list constantly. That's a sign that something you want to get involved with when it does pull back to the 50. I mean, I missed the one in April for whatever reason, probably because it was going into earnings. I didn't buy it there, but I waited till after. I don't like to go too close to earnings, everybody knows, but so yeah, that's the edge. You get that shakeout and recapture. So everybody that was using the 50-day as a stop probably got out, and then you're quiet and tight, and then you're turning up. And we just sold it into double-digit strength there, and we'll let it work itself out. In fact, the group is kind of telling us it's maybe not the best. The group's kind of declining, even with oil coming down instead of going up. Maybe some recession fears and things like that. So yeah, like I said, if it keeps staying on your universe list, that can be a clue itself. And that's where you want to sort of find your way in. There's a few ways to do it. Obviously, you're not getting a fully developed base, but you're catching part of the trend off these 50 turns. So, all right. So another thing we do is I like this buy we did here, LI. We just kind of sold this up into strength maybe a couple of days later. This is the initial look at it. So we did this slide a while back. It's sort of a nice. So we look at something like we call like just a pivot reset. You know, there's sort of a false breakout here at this. I can see my mouse on there. I don't know which one.
Yeah, yeah.
So you can see this here, sort of a false breakout. A lot of traders won't get re-involved with that or involved with that again. So we look for that to tighten up, and then we bought that, you know, taking out the prior daily high, and that just went right in the money. So we look at those as sort of shakeouts also, right? It's like a false breakout, but it didn't break down. It didn't break the 21 EMA and trade rather tight. You got the kind of double bottom pattern recognition on there, which we like to see, and then just tight handle flagging out there. So that's the reset. It reset rather nicely, and I think it just comes off everybody's list really, and you got to kind of be sharp with it. And that's the spot I don't think a lot of people would play, but we got that really right. So I think it's worth sort of an example. We get them wrong too, don't get me wrong, but you want to see what you can do. You know, this is what we look for. And this is sort of the second mouse gets the cheese set up. We talk a lot about that. Sometimes we'll let a few go, and it'll just end up like this. You just revisit it when everybody's already out of it. All the swing traders moved on to other names, and then you're back in the game with something that everybody took their eyes off of, and there's real buying behind it, real support there. So, and the same stock, I just have more notes here. It's all about the right side of the base. I mean, obviously this is rather tight, despite it, you know, sort of a false move. So you have to sort of be willing to do what maybe other traders aren't willing to do. And one of the ways we measure this with math is average true range. You want to see that declining into your buy point, basically. And like any kind of VCP is probably going to show that. So there is math behind it. You can scan for, you know, average true range that's kind of lower now than it was, you could say, however many days ago, 14 days or whatever. So yeah, double bottoms are great. We like that shakeout. Shakeouts are good. So I did get a little undercut there and set up after this kind of you know, earnings malfunction bar there, as I call it. So this is sort of what we're looking for, and it's sort of a subtle edge to be able to think like this. And this is just the start of it. There's a lot more to it, even relative strength line, other things. The group, you look at the group, obviously other related names and such were all setting up, so it was kind of a easy buy in a way. And so one of the things I like to do is, so this, I looked at the Bitcoin. So this was my most profitable trade of the year so far, trading it in February. We treat it like an IPO base, and I was using a spot chart. And we're trying it again. I might have to just, you know, size back if it comes back in on me. And we tried it again in May. We sold it into this kind of higher basing area, and you know, it's working on a new base. There's a Ethereum ETFs out now, and this, you know, it's a Trump play. I think, you know, he's polling high, so, you know, he's for crypto. I think there's as many as 100 million people that own crypto. So I think, you know, they're going to be pro crypto because they want the votes. Obviously, that'll be a kind of a not a great move to be against 100 million people's wallet. I mean, people vote with their wallet, right? So that's something to consider. So we're putting a couple things together there. And we got to revisit the stocks and double down on them. That's the whole point of stocks in your universe, like SkyWest. You know, we go back to this one. We got it here. We got it there. You double down. So some of this is not ideal buy points. We're playing momentum on the right side here, trying to catch, you know, trying to catch the move up through the 50. So once I get very profitable in a trade, I'm more comfortable, more aggressive with it. I'll go back and try to find a spot I think will work. So the second try was, you know, lightly profitable, not like the first one. This last try to be continued. We'll see what it does. And IPOs are sort of the only item we'll manually add to the stock universe. And this is, I mean, obviously Bitcoin's not an IPO, but we treated it like one. So we went down to the like the 60-minute chart. And what we do for those is we sort of cut them all in half the time frames, criterias and stuff. So a couple of requests for like some of the model trades we're working on this year. Eli Lilly, we did pretty well. We got spot in January, and then you're right at the end of the base there in May, and sold it on that break there, kind of around the 21 EMA, avoided 4% more to the downside, and now we're trying it off the 21 and a turn. It's a little aggressive because the volume down is pretty heavy and hard, but all the megas and sold off together there, and they appear to be bottoming at that point. So we're willing to give it a try to kind of that swing low of that area there. So it's got real earnings. You can be bigger in it. So this is why this was rather profitable for me for the year. You can get a lot of size in a big liquid name. Really putting all your money in a speculative biotech. I mean, you could have a big win out of it, but your life savings could be cut in half very quickly if you did something like that. So you got to position size correctly and make sure you're buying stuff that doesn't really have too many trap doors where you could wake up one morning and be down 50%. Or, that's why we don't go with some of the Chinese names, because there was some, Luckin Coffees and things like that. I never got caught in them, but I did trade some of that. And then to see something like that just go to zero is definitely something we want to avoid. So you want to trade the kind of liquid names if you can, and when they set up, get more size and take your pieces out of it. And we recently did have a rather thin market, so the megas were kind of working until about 2 weeks ago, when this kind of or a week ago when it kind of broke down there. So anyway, so more of the model trades, like we went over AVGO. That was this spot here back in May. We even tried a short that I ended up scratching for hardly any loss there, but revisited this turn here. It's an earnings pivot. This is something that we call an earnings pivot. It was on earnings, taking out the prior high on a pullback, and that really moved really well. The last one we got it well in the money and round tripped us, and then it took off without us, and that happens. You're gonna feel, if you don't feel stupid, once in a while trading, I don't know, you're not trading then. I mean, this is going to happen. Everything can set up and they just dump it out. Some random funds change their mind entirely, right? Things change over time. You can't predict that. If you could, you'd own everything. You'd have all assets and you'd own everything in the entire world, basically. So you can only take your pieces out of this stuff, and to protect yourself from the downside. Like that could have rolled over there down to the 200, and it just happened to turn up there. But right into earnings, I wasn't willing to buy that turn, because I wasn't expecting, a double-digit move right into earnings. So that was a tricky spot. And then you get more choppy, but I'm trying to get aggressive in a leader when things start firming up, and taking a little piece here, see if we can get something to work. And that was, this is Tuesday here, buying that spot. So anyway, high tight flags is sort of what I'm known for, I guess. So, we're going to go over a couple of these. And Richard, you want to tease it out, the masterclass?
Yeah, stay tuned as well. Leif does an amazing job trading these, and we're going to be doing kind of a special webinar, covering, exactly what to look for and how he trades them. So we don't have the final details yet, but if you're interested in that, just keep an eye out. We'll be letting you guys know. But yeah, Leif, this is your bread and butter, your specialty. This is what you were known for back in 2019, 2020, and you do a fantastic job picking the right spots, trading them. So yeah, I look forward to it.
That's what we have to figure out, and put it all down into a master class, and all the little nuances and stuff.
Yeah.
The first things first, I mean, this is like a look at Celsius energy drink, and the N in can slim is a very important thing for high tight flags. What's new about it? It's got to have something going on there if you're going to go up 100% and then go up another 100%. And what was new there is they just had a whole popular, I wouldn't say a new category, but they had the #1 energy drink on Amazon at least. And I thought it was okay. Tried it, and it's set up. You get some volume on the buy spot there, and I'm selling it in the strength there, of course. And this ended up going to 100, so you can also keep it. But if you're a swing trader, you're probably in and out more. There's several spots along the way. And if you don't really find this spot, like I was saying, you get aggressive with something that you're if you made the most money on this trade for the year, then you should be very aggressive on the next spot, even if it's not exactly textbook perfect. That's what I'm trying to say. So because you can let it fly and you kind of have the temperature of the stock, and you're kind of in step with it anyway, most likely if you made real money on it. So a high tight flag, what it is you typically want to see kind of a dormant state, and then all of a sudden everybody realizes, hey, this drink is hot, goes up 90% at least in 8 weeks or less, corrects 25% or less, and that kind of qualifies as a high tight flag. And I talked to Mike Webster a lot about this a little bit, and the spirit of one also kind of matters. You don't want to necessarily, well, that's more for the master class, but you get something that's 27% instead of 25, but you might let it slide if it's kind of to the end of the time frame we like, and it's up way over 100%, probably 200, 300, 400% or more. You're not going to get exact measurements out of something that moved. I've seen them go 800%, and during the COVID, you get some move at 800%, and then you're setting up, and you're worried about 2%. You're with a ruler and all that.
Right.
Sometimes the spirit is the most important thing too. So I want to go through the whole masterclass, but this is just a little preview of that. And there's a couple things I do also. We like the power, if a stock like this is in our universe, to try to tie this presentation together to make sense. These high tight flags are in our universe. Like, it's always going to be like this. You see the right side, you get the trending 200. All the moving averages look great, right? So they're all trending. This is what it's going to look like when you get a high tight flag in a stock in trend. And since then I'm going more $5 plus, but this was a little bit less. But it was kind of a special situation. I tend to go 5 plus.
And with the high tight flags, does it matter so much that the group's developing together, or if it's a lone wolf that's showing that power, that's still okay?
Yeah, the lone wolf is okay. I think this might be a split adjusted too. They did a split. I think I haven't kept up with it too much. I think the thing went to like almost 100 down to like 40 something recently. So
yeah,
it's something I'm not watching anymore. So you can't remember what it was. I feel like this was a little higher price then. So I think they might have done something.
I think a 2 for 1 maybe. I'll take a look.
They did something, because I typically don't go below 5. It must have been a special situation, or something's changed. Anyway, so once this this goes down below 25%, I still want to play it if it's a proper base. So we just call it rocket base. Just put a name on the so we know that the distance from in the flag top to bottom. If it's less than 50%, we just want more time then, right? So we call it rocket base. We do low tight flag. RSI is this gambling stock I just traded as a low tight flag. Just swung it out for 13% and took it off, something like that. You want to look for moves that are powerful, like this, like 60 to 90% move. Doesn't quite make it. So, but if it only corrects less than 15%, then I look for it to be, I'm trying to be aggressive with it, but 6 to 8 week base. I can really buy anything in a 6 to 8 week base. It's just something I prefer, right? So we just call it low tight flag, not trying to steal the whole high tight flag idea. It's really a William O'Neill idea. Just I'll go play around that, and then we have some names for what we're playing around it. Basically, that's kind of the idea there. So, and then we have the deep view, which is awesome. And you guys coming out with like new indicators all the time. And deep view looks like it's got some huge potential, and it's really good. I got a lot of people that saying it's awesome. So this is my first stab at it. We did some high tight flag scanner on it, and we have something called CORZ here, kind of a crypto play. This is something that's set up, and when this turns through here, I'm trying it. As long as crypto holds, I mean, this will probably do okay. So, this is typically what it looks like without the moving averages, but the moving averages are going to look similar to the other one there. So, and then you want to see a little bit of more high tight flag action. This is the one I was playing today. It was selling up 8% or so. But it's not easy all the time. We're in and out. I'm selling some in the strength. Getting a really bad bar back towards even, taking it off, letting it flag and re-engaging it. That's part of the process too. I don't want to make it look too easy. We're trying to find our spot where we can get this to go out 15% or more. move the stop to even, see how far it can go. Something like this moving almost 500%. It's got the end in can slim. It's kind of like 5G broadband from space. They made some deals with Verizon, AT&T, I think. So there's something going on there. This correction was about 25%, and then it starts kind of drifting out of there. And we're trying to find these spots, and it can be choppy on the way out. So you kind of have to, be aggressive about getting in and out, making sure you're in on the move. Right? I'm just waiting for any kind of a turn, trying to get back in, and that was today. If it fully reverses, it takes out the daily low there, I'd probably be out. So you want to look for that, this kind of power, and then that flagging action. That's relative strength line is a whole nother thing we get into, as that's going rising there, you're improving your odds, and you want to see the volume bars. You want to see big red ones. So I don't see any of that. So it's got something going on there. That's sort of the high tight flag, and then a little more of that. You want to see sales. You got TMDX transporting organs. So when you need your new liver, Richard, you can get delivered from TMDX.
You know me, I'll really need a new liver.
Well, you did hang out with me in Vegas for the night. You
Yeah.
weren't too bad though. But I got about 3 hours of sleep and went on stage. And don't go back and watch that one. I can't believe I was functional. Anyway, but that's because I was unsupervised in Vegas. Only had Richard to watch me there. And you're a good luck charm for. I bet all the money I had, everything I had, I bet on that fight, and I won. So that was good. The trip paid for itself.
I didn't get my check yet. I don't know.
Yeah. It's in the mail, man. All right. Anyway, so TMDX flagging out, choppy. You do sort of want to see this kind of down drift to the right at some point. I mean, it's flagged out long enough. Now, right into earnings, I figure they're going to make it difficult, and they're going to run it up. And that's where you sort of have to get as close to earnings as I'll go. I think we got a couple days. You get a nice little pop today. We're a little bit in the money on this try. And you might have to try it several times. I mean, that's the thing. And the thinner it is, the wider the bid and the ask. If you're going to try to adjust all the time, you're going to be getting a lot of slippage. So it depends on how something trades. Also, what kind of size you want to put on it. But this opened sort of on the low and pushed out. So today, so that's sort of confirming, and it was sort of new high there. I like it. It's got sales. There's something going on there. Everyone's gonna, get their organs delivered. So we like the N and can slim there. Something new. So CVNA, this has been a hot stock. This kind of meets, and I'm not really, we're not trading this on CTT right now, but we could, if this turned up here, I'd be interested. Tight and turn on top of this base. You want to be the pullbacks. You want to see on top of support, which is typically the base high. You had pretty much a cup and handle breakout and a pullback to it. So I could see the case to buy this. It sort of has this spirit of one. It's got the minimum requirements, but you don't want to see too much activity in the poll. And this 90% rise is the poll. You don't want to see a lot of kind of supply in there. You want to see kind of a clean break. Ideally, something 100% with no supply in the poll going back a year, right? That's the other thing. So we'll get into all that stuff in much more detail, I'm sure. And that's the high tight flag masterclass coming soon to TraderLion. But if you want to trade with me and people like Leosha, we're on Champion Team Trading, and we've had we've had a winner of the million plus contest on there, other contest players, and really focus on the universe that we're talking about and nothing else. We don't do any politics and nonsense. It's set up so it's all, topics for each stock, market signal. Everything's very organized, and we have a staff to do that for us, basically. So anyway, that's what I've been doing the last couple of years, and it's a lot of fun. So
perfect. Well, thanks for putting this together. I got a few questions. Could you jump back, I think 3 slides here? Not quite sure. Maybe one more. Yeah, around here. So some of these can set up kind of multiple flags as they go up.
sure.
How do you kind of decide which one to play, or it's already had a big move? it's still, playable if it sets up and tightens up again? Is it kind of like a late stage base? Do you kind of think of it that way, or if it's still showing that power, you'll kind of give it a shot?
Sure. I mean, eventually it'll probably, you know, crash and go to a new base or something, even if it's going to get on its way. Like Celsius had a lot of that, a lot of pausing for maybe months and years, or a year or two almost. But we're looking at. I wish I could dial this back, like we could use Deep View or something. But this day, I think it's like July 15th or 14th, something close to that. You had the downdrift to the right and the turn on the daily time frame there over the previous high. And
Hmm.
usually I'm trying to get in lower than the high, because at the high you get choppy. Like you can go back a few bars from the initial buy there, and you can see traders probably try to run that up there. It's a little early in my view. It wasn't super tight or anything, just kind of drifting. And you get that down drift to the right, and that's something David Ryan says a lot. It kind of lets all the little bit of sellers out in a turn. And then you're going to get sort of like a high handle on top of that, sort of almost like mini base on base here. But now you have this area on top of the previous kind of, this is the high tight flag where I bought it initially. Now you're kind of building on top of it. So that's sort of like a high handle idea. Looking for some kind of daily turn. When it nosedive like that, opened on the high and then closed on the low, that's, I'm just closing it and gonna get another look at it. Given how growth was selling off at the time, like I was showing the signal, even though the histogram was improving for the most part. If the histogram's improving with tech in the lead, then I'm, pedal to the metal gas. I'm
Hmm.
gassing it, because you don't get all year to make money. You get 2 to 3 times a year to make any real gains, unless you just catch Nvidia and sat in it, the whole thing. Um, Something going 100% over a full year, basically, or more. But yeah, hopefully that answers some
Yeah,
of that.
yeah, it's good. And you showed a diagram where you kind of had 300 something as a level to the top and around 70 to the low. What are you kind of doing during a correction when we do get to that low end? Does that tell you to be more aggressive with your homework, start looking for, leaders kind of moving ahead of the
Yeah.
market before the breath?
Yeah, it's kind of an extreme. If you go down to, I remember like 5 stocks in trend. I mean,
Right.
that's like, crickets. You're on the dance floor by yourself. Eventually they're going to show up. So you got to start to see them coming in the door. You got to start flowing in, and you got to get ready. But really, during that time frame, I'm shorting. It's like, it escapes me what year he won, but our contest player that won the million plus was mostly doing shorting, and that's what we were doing that year. There's more limited gains to be had that way. Typically, I mean, you'll see a lot of people say you don't have to short and all that. I mean, I like shorting when things are broken. That's, they're offering up breakdowns. It's the same as breakouts, right? So you're gonna play some of those. Like we looked at Disney recently. It was kind of an obvious ledge break. Even in this market, that's just kind of off by itself, falling apart. You can trade it. So what am I doing? I'm probably shorting. Actually, I'm doing a lot of shorts. So the platform we have is, probably active all the time, right? Because even when you're on kind of the choppy signal, there's stuff to play. Like we're playing a bunch of high tight flags even in this environment. So they all have a shot at, big gains. This could go to 20 or something. I don't know, but it could also stop me out tomorrow. From this day, we
Right.
just don't know, and we're just going to risk manage and see what we can do. But when it looks like this, it's got the look. It's like, you swipe right on your app that you young guys have, right? I never had one of those. You can't swipe. I'm swiping right on this chart. It's got the look, So I think that's what you do, right? You swipe right. So that's it. I mean, it looks good. It's got the look. Something's going on here. It's got the high rise and all the tightness and all that stuff. So
That's actually a feature we're adding to Deep View Mobile very soon, swipe writing on the charts. So it's funny you mentioned that. Yeah.
I love that. Swipe right. Let's go. Swipe right on this. I swipe right on this chart on Tuesday, and we'll see what happens to it. So
Yeah, perfect. Well, this has been great. Just a few wrap-up questions. Um, I know people, I'd encourage them to kind of watch our previous interviews and podcasts because you definitely touch on this, but just very briefly, you've kind of talked about the setup of the high tide flag. where are you
Yeah.
looking to sell into strength as it kind of works for you, and how are you managing your risk as it, works in your favor as well to keep that stop tight and make sure,
Yeah.
you're in the money quickly?
Well, it depends on the level of difficulty I'm experiencing. As things are bouncing all over the place, the money's moving to regional banks. I'm in a trickier spot, so I'm faster to sell. I usually want to see 15% or more before I take any scales on these. So that's the main target is you got to have several risk multiples because if you're going to try, you might have to try something like this several times. 5% risk is typically what I want to do within that range, and sometimes you have to go more because the daily time frames is too wide because these things are really ripping. But that's why you look for a 25% flag or less, right? Then you got rather tight area.
Right.
Even at 15% or so flag, you can just kind of buy the high then, right? That's I'm more likely to buy the high. Depends on uh, kind of the dimensions of how much support the thing has. If it's very tight, like a 10% flag, then you're buying the high probably because you're probably going to get a good stop somewhere as it tightens up around highs and busts out. So there's a few things to consider, but always trying to get more than one risk multiple. But the signal right here, it got difficult as we're in megas recently. Amazon was up 200 to 10% or something like that. Just everything's round tripping on those, even though we took some profit scales. A lot of the growth, even large cap growth, which has been leading all year, sort of was losing the values you can see on that slide, comparing the two. So it means you have to adjust your signal. If whatever you're trying to buy stops trending, it's a signal adjustment.
And for this chart in particular, ASTS, how you drew kind of the flag part, you're including the low of kind of that shakeout bar at the bottom. Is that kind of what you usually do when you're looking at that? Obviously, again, the spirit of the high tide flag, but
Yeah.
that's a demand bar. So some people might look to kind of use the two lows prior to that as kind of the bottom
You
of that
could.
base. Yeah.
Yeah, you could. I mean, it's just showing the power, right? I
Right.
mean, I'm not too picky with where it starts unless it's below the level, below 90%.
Right.
If I start cheating one down, it's the wrong bar. It's got to be in the last 2 months, and it's got to kind of be start from where it was kind of basing. And I think really anywhere in that zone. I mean, you could kind of the May 13th low. I think that's fine. I think I just threw this on there very quickly because it gets the point across.
Yeah.
For the master class, we're going to get it perfect. We're going to make sure we say exactly which bar I would use. But this is sort of either or. I think that this one's fine. Once the volume starts, I mean, that's kind of where it all kicked off.
Yeah.
From that move, if you're clear from there over 100%, you're good to go. Then you have your high tight flag in my view.
Yeah, perfect. And, coming back to the theme of your presentation, if people are kind of wanting to design their own universe for
Yeah.
themselves, what would be kind of some recommendations for you? You mentioned obviously the
Sure.
influences of Minervini's template, Stan Weinstein's methodology.
Right.
Where can they kind of start as their building blocks?
Well, yeah, as they say all the time, nothing good happens below the 200-day moving average, right? So you want to be in uptrends, most likely. You want to be in the liquid names. Maybe you trade all different types of chart patterns, but you want to be in the liquid ones, or maybe you don't. Maybe you want the smaller ones and you want a gambling account. It depends on what your style is. So maybe your style is completely on the gambling end, and you're doing the small account challenge, which I don't recommend. I'm not telling people to do that, but think about how you actually trade and make that your real universe. Maybe you're not honest with yourself, and that's all you do trade. You trade spec bios. Okay, fine. Make it all biotech. If that's all you trade, then that's your histogram, and make it. Your dollar value requirements, is it below $5, $10, 15? Some people want to go over $100. So these are very easy adjustments, and then you have your own histogram. So that's the point of this. I encourage everyone to do that. Get your own histogram set up and trade your universe and get good at it, be focused and specialized. And you probably will make some adjustments to your universe over time. As sort of for champion team, we've had a lot of members over the years. You'll see I kind of done away with spec bios altogether. Sort of like we'll look at them, but I won't even really trade them anymore. It's just over time you evolve. You don't want to put a lot of money in it, something can blow up. There's more relative safety. Of course, that can happen with anything, but there's more relative safety in the bigger liquid leaders, in my view, and that's more my universe. As that's part of my evolution in trading is, everyone's going to sort of adjust more and start to get into their preferences, and that should show in your histogram.
Yeah, excellent. And if you had one homework assignment for everybody who's watched this to go out and do, what would you what homework would you give them?
All right. Well, it's not nothing I prepared, but what I would do is define your universe.
There you
Right?
go.
That's the whole point of the slide deck. We go back to the front. Define your universe, right? So you can get good at it. Maybe it's only high tight flags or whatever. So this is a high tight flag on an NFT, on a moon. This is kind of a joke. Then you're gonna have your breakdown, okay, of what high tight flags are setting up. Maybe that's all you want to trade.
Right.
Okay, so then you can see which high tight flags are working, what market cap. At least you have some stats behind it. And now you're journaling a little better, and you're getting a little more of a clue. You say, oh well, this one's setting up, and all the micros I'm looking at are working in the high tight flags, and or whatever. So, or whatever sector is working. It's all healthcare high tight flags. So much innovation there all of a sudden, which is not really the case right now, except for TMDX. But you get the idea. You see what's working, and
Right.
where you want to move your chips, basically, and place your bets.
There you go. That's your homework, everybody. So go ahead and do that. We want to see tweets on Twitter sharing that. Leif, this has been great. Any last words of wisdom for everybody watching? Could be trading related, could be life related. What would you kind of leave everybody with today?
I don't know. Just know that the journey, you can get there. I mean, you saw this slide with Leosh, and it's a bumpy ride, but after several years, you're going to find your spot. Don't let yourself draw down too much. Don't fight the market. Give yourself some time, and you're going to get there. But you got to have that no quit attitude, just like he said at the end of your interview. Just watch his interview too. That's more homework. Watch Leosh's interview with Richard.
Yeah, that's good.
Good interview. Good realistic interview. I've been trading since 1996. I blew up in 96. So I was like 16 years old or whatever, but haven't done it since. So just trying not to have any drawdowns now, and trying to incrementally increase the net worth. It's all you're going to do. And it's, you have to like this stuff and get involved and be useful. You don't have to win the US investment championship to be useful. Go on X, post good ideas. Some unknown people are some of the people that I find the most helpful, including the people that are known, of course, but be a part of the community, and trade with like-minded traders, like I was saying, and improve that's the only way to improve, really. I mean, it's like having a training partner or something like that. So,
and define your stock trading universe. There you go.
Yeah, define your universe. Like that's what you got to do. Start writing down your ideas right now. But what is it that you're going to realize what you actually are good at trading, what you want to trade. It'll risk manage you better, right? You'll have better risk management if you're trading more liquids, if forcing yourself into more quality. That could be one thing you realize. Maybe you want to do that for yourself. You don't want to trade only high tight flags or something, in spec bios or something like that. So make sure something has, I don't know if you can put sales on that, but that can be part of the universe. Someone's got to have sales. Most of the stuff we trade does. That's not a factor on the histogram, but another idea if you want to take this farther. So all the stuff you require, make sure that you're focused on that.
Yeah, perfect. And sorry, I got one last question for you. Regarding market cap specifically, is there a breakdown between mid, large, small that you prefer, or which sectors and industries are working? That's a little bit more important.
Yeah, I mean, I prefer small caps ripping. Go back to COVID, take me back. I couldn't taste the wine in February for an hour or two. So, but I didn't like shutting down the country, but give me that stock move after that. Yeah. There were a lot of smalls breaking out, going crazy. That's where you can compound your money. Okay. You can put big bets once you start getting going, and smalls that go, 20%, You know, we were even trading some Chinese stocks. As soon as I buy it, it's 20% up. I mean, that was ridiculous. So, you know, small names moving fast. That's the time to compound your account the best, in my view. And you got to do it incrementally and carefully with gains. I mean, you don't just go all in on small caps, but and they happen to be working now. They're just the wrong small caps, like all regional banks and stuff. So that flips around. I'm excited, and we're gonna go for it. So we'll see.
Perfect. Well, Leif, thanks again for your time. Always fun talking with you, and I think
Yeah,
there's
thanks
a
for
lot
having
of
me.
golden nuggets here. Yeah, of course. To everybody watching, please go ahead and leave a like down below. Thank Leif in the chat right now.